Meet the Expert, a knowledge-sharing initiative of your knowledge partner, the Developing Bangladesh. We discuss on trade, investment, commerce, education, skills, economic development, global peace and prosperity, etc. issues. If you are interested to these issues, please subscribe to the channel. Developing Bangladesh, your knowledge partner, please subscribe now.
Minus figure, which means HMRC owes you money, because the way it's seen is you're collecting the VAT on behalf of the government on your output tax, and you're also claiming back VAT on the input tax. So I understand in Bangladesh that if there's input tax and it's minus, you don't get a repayment. Is that correct?
No. Actually, if sometime we pay more, then it is difficult to get it again, because everything is possible without the rebate into cash. Just you cannot encash the rebate. Obviously, sometime government allow to adjust it with your tax next year.
Okay. So we have situations like, because you can't, we have situations where you're exporting to other countries, but there's, you can't, government cannot collect the VAT on sales that are being exported on other countries. And so there's no VAT on that, it's zero rated. But you're buying the supplies in here in UK, which you can claim back. So you have a position of where you're getting input VAT back, but you're not having to pay any VAT out. So that's why there's quite a few investigations that do go on into situations like that. So any repayment, there's always a check. So that flags up on the system that there's a credit check, that credit that is due to the customer, and we would like to, each compliance manager in HMRC will have a look, risk assess it, and if they think there is risk there, then it will go to a VAT officer, and the VAT officer then would look at it, actually phone up and ask questions about it, and then it will be, looked into and checked. So all VAT returns is everything HMRC does is a case of process now, and if it gets checked later.
Oh.
That's how HMRC works. Okay. Right. The next is, I've talked about VAT. Oh, I forgot to say the VAT is submitted online on a quarterly basis every 3 months. So whereas you have income tax on a yearly basis, corporation tax on a yearly basis, you have pay as you earn, the income tax submitted by the employer, that's on a monthly basis. VAT is actually on a quarterly basis, so every 3 months it's being submitted. Again, online, that is now legislation. It's a legal requirement. VAT has to be submitted online through accounting software now. And this is also going to be applied later on to income tax as well. That is going to have to be done through accounting software, but that's been pushed back because of everything that's been happened. So it's because tax is going digital in UK, so they want to digitalize everything, and there's a plan in place. A whole government program is behind this. It's just taken a bit of time for it to be implemented. There's going to be a point where everything we do is just going to be done online. I mean, we have to an extent have everything online, but it's going to be, they're looking at doing that 100%, that it should be connected directly with the accounting software. And from there, it's submitted. At the moment, the filing process is online, but it's separate from the accounting side of things. So the accounts are done, and then the figures are then transferred separately and put in on the online filing system. What HMRC, the government, wants to do is that should be actually linked to the accounting system. The figures are transposed automatically to the tax return, and it's filed through a digital link to HMRC systems. So there's a slight difference in the system. So we're looking to do that at the moment. Okay, national insurance, which you was discussing earlier on, that is similar to income tax, but this is actually the tax or national insurance. It's to help pay for some state benefits and at times when individuals need help. So this is what you meant about the security, and this is also what I meant where tax policy is the one that pushes through the social policy, because without the funding, you can't implement the social policy. So UK is very famous for their NHS health system, National Health Service, for which it's this national insurance, this tax, that is actually going forward to being to pay directly for our National Health Service. So it's paid directly from our salaries and from our self-assessed income. So the point is, when you go there at the point of service, in any, like the doctor or the hospital, it's free at that point. But actually, it's being paid this way on a national level. This is how it's being funded. So, so that individuals, when they have some financial assistance from the government, from this national insurance, when they're unemployed, when they fall ill, or when they're in retirement, because we get a pension as well, or on even bereavement. So, this is what the national insurance covers. So the employers, they have to pay national insurance based on a percentage of the employee's wages. So actually it's gone up a bit because of COVID. So we've had to increase our contribution, but that's going to be cancelled in April 2023. It will go back to 13.8%. Again, it's all on a sliding rule. So anything above £175 a week that is earned by, which is earned by the employee, they pay 13.8%. The employer paid 13.8% on top of that. Okay. Also, all employers have the first £4,000 of national insurance they pay is called an employer's allowance. They don't have to pay any national insurance on that. So there is an allowance for smaller companies. The first £4,000 of national insurance you have to pay, is exempted, like the personal allowance in the income tax, similar kind of rule. So you have the employer side, they have to pay the employer's national insurance on behalf of the employee, which all goes to a pot for social security benefits, National Health Service, and so on. So that's the employer's duty. The employer has to do that. But then you have the employee as well. The employee also has to pay national insurance. So they have to pay 12%, anything over £242, and then anything over £967 in a week, another 2% on top. So normally, it's 12%, and then you've got the employer, he has to pay another 13.8% on top of the salary. So this is the system that actually is keeping all of the funding the national National Health Service, retirement pensions, bereavements, unemployment benefits, and so on. So this is what's keeping all of that going. So individuals, we all have to pay extra in order to safeguard our, security. So if we fall ill and so on, that's the safety net that you was talking about earlier. Again, it is collected in different ways. It's done on the pay-as-you-earn, which I showed earlier on, RTI, real-time information on a monthly basis. And then it's also the income tax, the self-assessment that is submitted on 31st of January every year. And also through the corporation tax, where they also declare it as an expense, because it's an expense for the company. it's also declared in that way as well. So there's various ways it's declared. And if you're like a self-assess and you're paid tax at source, because of the calculations, you can end up paying maybe too much tax overall. You get that back. Or if you haven't paid enough, then you have to pay the extra. So that's why it's important the way this.
Developing Bangladesh, your knowledge partner. We take care of trade and investment, education and skills, economic diplomacy and economic development. If you would like to keep you updated on these issues, please subscribe to Developing Bangladesh. Thank you very much for watching till the last.